Today I have the best 5-minute price action trading strategies for you. I've prepared a lot of charts, a lot of advanced concepts. I will show you exactly how to find the best trades and what to look for on the 5-minute time frame as a day trader. So we're starting with the first chart, and here we can see so many interesting things and we can learn a lot for day traders. So we are starting on the 5-minute, and what we see is that currently the market seems to have broken above last week's high. And as a day trader, it's really important that you track last week's high and last week's low. They are very, very important levels. And as a day trader, you find great opportunities around those areas. So we see that the market has been broken out. But what we also see is that why I would follow this market in the first place is because we have a trending market. So you can see that there's a lot of momentum. The price is moving a lot and there seems to be not too much noise in the market, which is good. The market is trending. It means that there's a lot of action. A lot of traders are getting into and out of trades. And this makes more trending and more momentum likely in the future as well. So I want to see a market that is moving nicely, and then we can expect, not with 100% certainty, but with some degree of certainty, that we can see more trending. And what I want to see is, now that we are above last week's high, what I want to see is that the market either establishes this previous resistance level now as support and then we bounce higher, or the alternative scenario would be that we get under this, then retest it from underneath as resistance. So the resistance is holding and this is going to turn into a fake out. And then we could look for trading scenarios to the downside. So now we can see, and we have to wait, obviously, what of those things is going to happen first. But those areas, last week's high and last week's low, are very, very interesting areas. We can see that we had a fake out, and this fake out then led to this trend. And now we have to see, is this already all that we got from the trend? Are the trend traders satisfied? Will they take profits? Profit taking will then mean more bearishness, but we will see. So we're going to follow the price action and just see step by step what happened. First of all, very classic, we are seeing that the market is making its move into the previous low or previous high, and now it could become a previous low. So that's a good first step. Now we see a continuation attempt above the previous highs, which looks good, but you can see we are not able to get a lot higher than the previous high. If you would add a RSI, for example, or a MACD, you will get a divergence here, but also here, because those trending waves or phases are very, very short compared to what we have seen here. So let's keep going. And now we can say, okay, we want to get long. If the market gets above this area, we want to see that we are breaking the divergence. So we have a divergence, and we don't want to trade long into a divergence, right? Because a divergence means fading price action. So we want to see the market get above this area, but we want to see it with strong force. Or our other scenario, remember, we were looking for a move to the downside. So those are our two trading plans. We're back at the level here. And it's very common to see the market struggle a little bit around last week's high and last week's low, especially after such a strong trending period. A lot of traders are sitting probably on a lot of profits, and now a lot of traders are estimating should they take profits. Also, when you grab your Fibonacci tool and you draw Fibonacci from here to here, you can see we have a nice 50 retracement, and then we have a 61 completion, which means that at this point 161 is an area where a lot of profit taking is taking place. So we know that 161 has already a high likelihood for profit taking, right? And this means that a higher push is not as likely. But we have to wait for the market to really confirm the fake out. When is the fake out confirmed? The fake out is confirmed if we can get below this. If the price gets below this, you're looking at a high probability short. After an exhausted trend, after profit taking at a last week high. So let's see, can we get below the level? And it seems like we do. Let's zoom in. You can see the market is now making lower highs, which is really, really important, especially after the divergence that we have here. And let's just keep going. So we are now underneath the level, and you can see we seem to be moving lower. Let me speed it up. And you can see the price is moving very nicely to the downside and followed through on the bearish note. So recap, we have so many things coming together here that's very important to note. First of all, we have last week's high. We have a completed trend phase, right? We have the A, B, C, D move. At the same time, we have divergences here building. At the same time, the market is struggling to stay above the recent last week high, and we make lower highs after the divergence, very bearish signal. We climb back or fall back below this area, and then here is where the downtrend started. So if you're looking for exhaustion trends, or even if you are in a long trade and then you see those signs of struggle, get out of a long trade and think about how could you get into a short trade, because those are often really, really interesting trading scenarios. With this example, we can deepen our understanding of trending phases, and we want to compare bullish and bearish trending phases. So the market has been rallying, obviously, and then we have a sell-off period, right? So let me make this in another color. And when we want to analyze the strength, obviously, well, on the first glance, we can see that this box is obviously much longer, but it's also much smaller, right? So here the red box shows us that in a short amount of time, because the box is narrow, the market moved a lot. Whereas here, over a long period of time, because the box is longer, the market didn't move as much, right? Because we only made or were able to cover this distance from the high to here. So that's very important to understand, because it shows us already that probably there's more buying going on. And in this context, we want to be very careful with selling, if we even want to sell at all. We want to probably look for a continuation, because now it looks like we are looking at a trending market, right? We have wave 1, corrective wave 2, and then ideally we want to get into trending wave 3. Wave 1 and wave 3 and wave 5 are trending waves, and wave 2 and wave 4 are consolidations. So that's how trends play out. And if you see a very weak wave 2, that's a good sign. So we could also now add our patterns, maybe a channel. And because I am just such a big fan, let's activate daily pivots. And you can see the market is trading into the daily pivot. And how is it trading into the daily pivot? You can see we try to break below it here. We made a lower high, a second breakout attempt, and then here a lower high. The market did try to break out, but you can see not a very, very strong push. So another important piece of information that shows us there's not too much selling going on, and there's probably still quite some buying going on here behind the scenes. And also we activate the weekly pivot, and you can see now we have the cluster. You can see weekly, daily pivot are very, very close. Weekly pivot here, daily pivot here. So this is a very, very strong cluster that markets typically, if they're able to break it, they need a lot of force. But for us, this is good news, because it shows us that we have a push. The push was able to get above the cluster, so that shows us strength. And now the weakness, or the corrective wave, is struggling to get below the cluster. So one more point for the bulls. And now you can see we have a lot of things stacking up for the bullish side. What do? You have obviously options for entries, so you could just wait for the market to clear high, then either breakout or break and retest. And that's typically what you or what most traders do. Some traders may use a trend line as well, and that could also be an option. Our analysis now has shown that the bullish side seems to be still in control. The long push, the ability to break above previous highs, the short corrective wave, the struggle here to continue to get lower, this all shows us the bullish side has more likelihood to continue. And then we just wait it out. We wait for the market to clear a level. This is actually quite a good signal, because it shows us the market is trying to push into the high, and it keeps revalidating the level, right? So at this point we know, okay, this is definitely a valid resistance level, and a break above this would be a meaningful signal. So we push lower. We don't get back below the low. This is the key. We don't get back below the low. We keep making a higher low, and then you can see the breakout happening here. So you can see this is so many things coming together, and then at this point a continuation is very likely. And again, we keep repeating the pattern. Long trend, short period, long trend, short period, and in the meantime the corrective wave, they take longer, they are weaker, and they show you clearly that there's a huge difference between the buying part, the buying sequences, the buying period, versus the selling versus the buying. And that's how you can really make sense of the chart. And I would always ask myself, who is in control here? What are the signals that the buyers are stronger? What are the signals that the sellers are stronger? And then you can arrive at a pretty sophisticated conclusion at the end. What is gonna likely happen next? So here we are on the current situation on the EuroCAD, and there's something really interesting happening that I believe most day traders will really benefit from. And we're adding the daily pivot point. We go to indicator, and then you just need to enter pivot point, and then you can see it's called pivot point standard. Very simple. Then you just open the settings, and under input, you deselect everything from S1 until S5. You also deselect all the R levels and only remain with the pivot. And then it will look like here, this pivot. You can see only pivot, and that's the black line. And the pivot is so important because it helps us understand trend direction. So a very, very important event on your chart is when the pivot structure changes. When you go from the market using the pivot as resistance and staying below the pivot, not able to get above it, to when something changes, like here, where we are suddenly able to really squeeze above the pivot, where we are even trading above the pivot. That's a very, very important change. And very often those mark trend changes. So here you can see, up until this point, it's very clear we're in a downtrend because the market keeps breaking and trading into the pivots and rejecting them. And then something changes, and here's the transition period where we have a lot of noise. The pivots are also coming together. When you zoom in, you can see the distance between the pivots is very different. Also, then here is the decisive change. Here, we suddenly have the price change, and we move into the pivot from above and retest it from above. You can see it multiple times. So this is a very, very important tool for day traders. I keep stressing the pivots enough. It's a very simple tool, but it's really, really effective. I believe it's effective to that degree because so many day traders use it. The more I talk to day traders, the more I see how popular this is. And you can start with a pivot pullback approach. For example, you could wait until you can clearly identify the trend. So when you see the pivots are moving up, you're clearly in an uptrend, right? And then you just look for consolidations, break and retests, add those pivots. You could look for a fake out. So here you can see we have a trend line that leads us back into the pivot. And then on the trend line, break and retest, we move higher. And then we enter the next sideways period. We have a fake out here where we trade below previous support. We fake out, get above the pivot, and then keep trading higher until the next trending leg. We move higher, we come back into the pivot. This time you can see we are not even able to get below the pivot. We reject it, and then on the breakout, continue the trend. And then it changed. Here you can see the market pulled away quite a bit. We came back into the pivot, but this time there was no rejection. The market just fell below the pivot, and when we zoom in, you can see that it changed now. We made a lower bounce. So you can see the market is already showing you lower highs. Then we trade below it, retest it as resistance this time. And then you can see this is the current situation. It seems like the market did try to get above it, but was rejected. And now it looks like a head and shoulder at the pivot. And you can see, but this has happened late Friday, so there was not a lot of time for the market to move. We are just back at the previous lows. So this is a very, very important study, I think, and a lot of traders could benefit from trading with pivot points. As a day trader, you add the daily pivot point. As a swing trader, you use the weekly pivot point. Here's a fascinating example because we can combine price action with session timing. So this is a current chart, and since I'm recording this on a weekend, this is the Friday price action, right? So this is what happened on the last trading day of the week. And what we can see here is a very classic dead cat bounce pattern. So let me walk you through this step by step. First of all, we can see that we're coming here from this range. The market had been trading in a range. Then we broke out of the range, or the price rather, and we moved higher, obviously. Very, very strong push higher. Okay, so now you have to think about what is happening here. A lot of traders get into buying opportunities, maybe somewhere around the breakout. And then as the market moves higher, what is going to happen? They're going to sit on a lot of profits. So those traders see that their broker account, their unrealized P&L is probably quite high. And what they also see is that we are coming to the end of the week. And typically day traders, especially 5-minute traders, they typically don't hold trades over the weekend, right? Because you want to be flat at the end of the day and especially end of the week. So what happens is that as the market moves higher, you are looking for signs of weaknesses. And signs of weaknesses could be here the big move to the downside. Let me move this, or let me clear this. So after the push to the upside, that's your bullishness. And then probably a lot of traders are thinking about taking profits, right? And then the profit taking is gonna lead to more selling, which is happening here. And this is where the dead cat bounce comes in. Then you wanna observe after the strong push, how far is the price able to get back to the last high? So this is the ultimate high, the high of the trend push. And what you could do is then with the Fibonacci tool, that's what it's there for, you could use it and drag it from point A, the top, to the end of the correction wave. And then you can see we have a perfect 50 retracement. Ideally, you would like to see a dead cat bounce either into the 38 or into the 50. If you have not mirrored your Fibonacci, this is going to read 61.8 for you, but mine's here, so it doesn't matter. But what you see is that we are making a significantly lower low. And at that point, you could go down even to the 1 minute chart and see how is the market trading around the 50. And there you can then find exhaustion patterns, a head and shoulder, for example. You could use trendline breakouts. And then you can see as the accelerated profit taking continues, you see huge pushes because everybody wants to be out of the trade before Friday closes. You don't want to have open weekend risk. And this is how this pattern can manifest. A lot of trading going on here, a lot of profits probably going to be made after the market has been moving sideways. A lot of people made money and then they wanted to close the week in a profit, don't want to risk giving back the money. Then you can see initial selling. Then you can see we have the dead cat bounce, which makes it look like a maybe a relief pattern. But then on the next sign of weakness, that's where everybody's going to run for the door and going to go for the panic exit. Because then it's really clear that we are not in a bull market anymore and you don't want to be left holding the bag as the last one, right? So that's where then this cascade of selling kicks in and you have big pushes into the end of the market and end of the weekend. So there are multiple ways how you could profit from this. Either if you are a breakout trader, just be very wary about the profit taking. And if you see signs of very strong selling, make sure that you're not too greedy and you take the exit before the dead cat bounce happens. If, on the other hand, you are a trader who want to specialize in dead cat bounces, look for those patterns. Look also for the patterns where they make sense from a time perspective. End of trading day, end of a trading session makes a lot of sense. End of a trading week makes a lot of sense. And then look for signs of weaknesses, profit taking, and previous trending where maybe a lot of traders are sitting on a lot of profits. Now let's take a look at a news event, and here what we can see is that here there was some really important news released and that led to a lot of price fluctuations. What we see is that the market initially here with the first red big candle moved into the previous low, then we shoot higher, take out the previous high with this candle, and afterwards we are moving lower. And this is a very, very common pattern in news trading or around news events, that you see multiple fake outs. And this is why news trading is or can be really difficult, because the news price action often makes it look like the market is on the run. However, if you're a news trader and you've been struggling, I would recommend to wait for fake outs. Wait for a very clear fake out. Especially something like here. We have, here was the news released, we have a pre-news range, right? Before the news, the market stopped its trending behavior and entered a sideways phase. That is already a good sign that you're looking at a high impact news event and that on the news event, there's a high likelihood for some movements. Another thing that I would recommend, just to get some perspective, we add the daily and the weekly pivot. And you can see the daily pivot is this black line. The weekly pivot is this purple line, which seems to be really well respected on this market. You can see we had a previous resistance spike here that was rejected. We had a flip here, and then afterwards this area turned into a support level. So here in this case, I think it's quite clear what we are going to do. We waited. First of all, after the news event, you never want to trade right away. You really want to wait until the dust has settled. The fake out is happening here, right? Because we take out the previous highs and then we are back at the lows. But you really don't want to trade here. This doesn't make any sense to go short because you're immediately trading into this area. And of course, sometimes this will break, but very often this will also hold, as we have seen many, many times. And because we don't know in advance, will it hold or will it break? I would always recommend to wait for it to get on the other side, either a break and retest or just a general breakout approach. And that's where you can often filter out a lot of noise, a lot of bad trades, and you will often end up with much better trading quality. So let's see. We get here below this level And now it makes way more sense to go short than going short below or above the level. And now you can see we are trading here below this weekly pivot. The weekly pivot has often a tendency to get retested. We'll see it very, very often on a flip. We break out, come back, retest it. Also to the downside, break out, come back and retest it. So it could also be a good trading idea or strategy to wait for the retest. Not always will you get a retest. Sometimes the market will just run away, but that's the downside of pullbacks or breakout trading. And you can see we are immediately coming back, and previously support is now turning into resistance here. We're retesting this zone, which is the cluster of support and resistance. And you can see afterwards the market falls down. So really nice example. Let me speed it up to see how far do we get, what is happening, and then I will just talk a little bit about this setup. So you can see we got a new pivot for the week and the day, which means that this was now the Friday end. So this seems to be Friday news, maybe interest rates, maybe NFP related, but big news event, pre-news trading. We have the fake out. Always wait for the fake out. If you can practice patience and really wait for the fake outs and then wait for the breakout into a new structure, into a new low, wait for the market to clear a level, to retest previous support as resistance, you can greatly improve the quality of your system.